Hi everyone, welcome back to Saheb Academy. Today in the second video of issue of shares chapter, we are going to start with the accounting treatment. First, we are going to see the journal entries, and then we'll see some shortcuts that are very important, and then we'll see the balance sheet disclosure, how we have to present this in balance sheet. Right, but before doing all this, please make sure you have watched the first video, because in the first video we have discussed the entire concept of this chapter. As you can see over here, beautiful example we took, what shareholders get in return, the meaning of shares, right, the face value and then the market value, right. And then we understood this example, how we started from sole proprietorship and then we became a public company. Then methods to issue shares, public issue, private placement, rights issue, bonus issue. Then we understood issue price, yes. And then here I told you there can be three cases: issue at par, issue at premium, or issue at discount. But this is not allowed, yeah, as per section 53 of the Companies Act, right? So then see here, IPO can be done by two approaches. We understood fixed price method and book building method. I told you money can come all at once or in installments, but first we'll focus mainly on installments only. And then I gave you the basic funda of face value and premium, where I told you that face value will go to equity share capital account because that's the capital thing, and then whatever extra money we receive, that's called premium, which will go in securities premium, isn't it? Yes. And then we understood the process of issuing shares to the public for cash. First we issue prospectus, then we get applications and application money, then we allot the shares, right? And then we make calls on shares. When we receive all the money, the shares become fully paid up. Yeah, that's the process. All right. Then what did we understand? Then we understood there are two different type of shares: equity shares and preference shares, right? Yes. And then we discussed kinds of share capital: authorized, issued, subscribed, called up, paid up, uncalled capital, and then reserve capital. Okay, all right. Then at last we understood what do we mean by subscription: full subscription, under subscription, and over subscription. Yes. And then I also told you about minimum subscription, 90% rule. This must be satisfied. And then some restriction on application money by the Companies Act and Securities Exchange Board of India. Yeah, yes. So to understand all of that in very much detail and with logic, please watch the first video and then only watch the second video, right? So let's get back to the accounting treatment. Yeah, let's understand this. Now see here, the accounting treatment of issue of shares is very simple. First you have to understand who are you, what are you trying to do over here. You are the accountant of this company. This company is issuing shares to the public and getting the money. You have to do accounting of that. Yes, so you have to think always from this company's point of view. If you start thinking from the shareholders' point of view, then you will start making endless mistakes. All right, so always remember, think from company's point of view only. Okay, understood. Now let's just say, for example, our company is issuing shares to the public. How many shares? 1 lakh shares. Now company has two options: either issue them at par or issue them at premium. At par means what? At par means issue price is equal to face value. Yes. At premium means issue price is more than the face value. Okay. Yes. Let's just say our company is going for this option, issue at par. So our face value, let's just say, is 10 rupees and issue price is also 10 rupees. Yeah, both are same. That's why it is issue at par. Now let me tell you, face value will always go to equity share capital account. All right, basic funda of face value and premium I told you in the previous video, isn't it? That face value will always go to equity share capital account, then whatever extra is there, that will go to securities premium. Fine. Yes. And then one more thing I want to tell you, see here, why I have written cash over here. That's because cash or bank account will always play its game on issue price. What is issue price? It is the price at which we sell our shares to the public. Yeah, at the price we issue the shares. So money will come on the basis of issue price, no? Isn't it? Not on the face value. Is that clear? So that is why cash I have written over here. Okay. So let's just say, for example, we are asking the money from public in installments, in stages. On application we have asked give us 6 rupees. On allotment we said give us 1 rupee. On first call we said give us 1 rupee. on final call we said give us 2 rupees. So if you add all this, 6 plus 1 plus 1 plus 2, that is equal to 10 rupees. All 10 rupees is received in stages, right? And then how money will go in equity share capital account? 6, yeah, that's the face value. 1 face value, 1 face value, 2 face value, it will go entirely to equity share capital account, slowly, part by part. Is that clear? Simple. Now let's just say the company didn't do this. Company went for this second option, issue at premium. In premium, what happens? In premium, see, face value is 10 only, yes, but the issue price over here is 18 rupees. Now 18 rupees means it is more than the face value. So this is issue at premium, yeah. So you have to understand how we are going to get the money. Are we going to get 10 rupees per share or 18 rupees per share? 18 rupees per share. So cash or bank account will play its game on issue price. At this price, we have sold our share. Okay. Now out of this, you have to understand first only what is the breakdown. Yeah. First, always understand the breakdown. In this 18 rupees, 10 is the face value and then 8 rupees is the extra, that is the premium, which has to go in SP account, securities premium account. Okay. Right. Now here also 4 stages, 4 installments. Okay. On application, the company said we want 6 rupees. Okay. And then the company said on allotment we want 9 rupees. And then the company said on first call we want 1 rupee, final call 2 rupees. Right. In total we have received 18 rupees from the public. Yes. Simple. Yes, you understood. Now you have to understand how money will go in equity share capital account. Okay. In this installment which you have received, in this what are the face values you have to understand. See, 6 is face value, it will go in equity share capital account. Now in this 9, let's just say the question has said that in this 9, you know, there is premium money. In this allotment money there is premium. How much premium? You already know 8 is premium, so 8 premium is hidden in this. So in this 9 rupees, face value is 1, remaining 8 rupees is the premium thing. So only face value will go to equity share capital account. No. So here you will take 1. Is that clear? Simple. Then the question said, you know, 1 rupee first call, that's face value only. This 2 rupees also face value only, right? So you understand. Sometimes the question will tell you where this premium, this extra money is hidden, in which installment it is hidden. It can be hidden in application, it can be hidden in allotment, it can be hidden in first call, it can be hidden in final call also. Yeah, but if the question is silent, if the question doesn't say, then you have to understand it will always be hidden in the allotment money only, here only. Is that clear? So I have written a note regarding that. Securities premium can be hidden in any installment, yeah, application, allotment, first call, second call, final call, yeah. But if the question is silent, always assume it is hidden in the allotment money. Is it clear? Simple and straightforward. Okay. This will become more clear as you see more problems, right? It is a very simple thing. Then see here some notes. Only face value will go to equity share capital account. Yes, I told you that. Cash or bank will always follow issue price. Yes, it will follow issue price because at that price we have issued the shares, we have sold the shares. On that basis only we'll get the money. And premium will always go to securities premium account. Okay. So you have understood the basic structure now. Yeah. Now let's just move on to the journal entries. Okay. So journal entries also we have to see first of at par and then at premium. It is really simple. Okay. There is only slight difference. Okay. Let's go to the journal entries now. Now see here we have the journal entries. If shares are issued at par, let's understand this. It's really simple. This is the first case, shares issued at par. Now here we have how many stages, how many installments? 4 installments, application, allotment, first call, final call. First, what happened? First, we issued the prospectus. We let the people know about our IPO. We are issuing the shares to public. Then people applied for the shares along with the application money. So we got what? Applications from people along with the application money, 6 rupees per share. Do you understand this? This transaction we have to record first. All right. So you can see now, right, what has happened. See, we have issued 1 lakh shares. We have got applications for 1 lakh shares. This is the case of full subscription. So first this we have to record. Okay. Then will come the allotment and everything. First, just focus on application. Application money received. We have got the money. How much we have got? We have got 6 lakhs. How 6 lakhs? Really simple. See, how much did they apply for? 1 lakh shares they applied for. The whole issue. 1 lakh into IP. What do you mean by IP? Can we take 10 rupees? No. IP over here in this shortcut, in this red ink, means, application part of IP. That is 6, no? 6 rupees per share is the application part of IP. So that is what you are going to take. 1 lakh into 6 lakh money we have received. Why we have received this money? Because of application. So 2 share application account. Is it clear? 6 lakh, easy. Then this share application account is there, no? This is just a temporary dummy account. We have to cancel this account. Okay. So to cancel, what you will do, this is accounting. We cannot just cross it off. Yeah. First you have credited, no? To cancel, you will debit. Okay. So share application account debit to equity share capital account. So see what is happening over here. Yeah, you are debiting 6 lakhs, you're cancelling share application, and that 6 lakh ultimately has to go to capital account, equity share capital account. I told eventually what will happen, face value has to go to equity share capital account, right? So that's what is happening. See here, equity share capital account is a credit balance account. It has credit balance. It is increasing. You have to record means you have to credit it. You all know now modern rules of debit and credit. Yes, equity. This capital falls in equity category. Yeah, it has credit balance. It is increasing means you have to credit. Okay, understood. Now what is this? Here you have written applied into IP, then here allotted into face value. Yes, you have to be very careful about this. Yeah, share application directly you will take. Whatever you have taken over here, that will directly come over here. Okay, don't think anything about it. But when you take the amount into capital account, here you have to be very careful. You have to see how many shares are actually allotted by us. Yeah, this you have to take. Let's just say 1 lakh shares have been allotted. So 1 lakh shares have been allotted. That's what you will take into face value. Face value doesn't mean over here in the shortcut the entire 10 rupees. No, it means application part of face value, this 6 rupees. Do you understand? Sometimes there can be difference over here. Yeah, when premium comes, what happens? There is difference, no? Isn't it? So that is why we have differentiated it. Okay, you will understand more about it when we see the journal entries of premium. Okay, so like this 6 lakh will come over here. There is no difference over here, right? Okay, so application stage is completed. Okay, then we have allotment stage, allotment installment. So here what is happening? First, as a company, what we are going to do, we are going to call the shareholders. See, shareholders, 1 rupee is due on allotment. Please pay us. So first we will pass the due entry. Our capital has to be increased. We will increase the capital. See, allotment money due to equity share capital account. Okay, how we will take the amount? Allotted into face value. Face value doesn't mean 10 rupees over here in this shortcut. It means allotment part of face value. Allotment part of face value, which is 1 rupees, right? So 1 rupee into 1 lakh. 1 lakh shares we allotted, no? So 1 lakh into 1, that is 1 lakh. So 1 lakh will go in equity share capital account. Yeah, capital is increasing because of 1 lakh allotment money. We have not received the money. Here we are just making it due. We have to receive 1 lakh, right? So see, share allotment account, you have to debit. Why? Because see, understand, like this you have to think. I have to increase the capital by 1 lakh. Why? Because of allotment. Like this. Simple, easy. Yeah, 1 lakh amount came. You understood this. Then the same thinking. Allotment account is a dummy temporary account. We have to cancel this account. It has been debited over here. To cancel, what we are going to do? We are going to do opposite. We are going to, credit the allotment account. See here. To share allotment account. Yeah, how much amount did you take over here? 1 lakh, no? So 1 lakh you have to take and you have to cancel. And you will receive the money actually. Yeah, you have received the money. First, what happens? First, we make it due that we have to receive. Then the money is actually received. So the entry will be bank account debit to share allotment. Or you can think like this. See, we have got the money, allotment money. So bank account debit, bank balance is increasing. You will debit the bank account, of course. Why you have received? Because of allotment. Yeah, ultimately you will see share allotment, here it is getting debited, here it is getting credited. So share allotment is cancelled. It will not appear anywhere in balance sheet, nowhere. Is that clear? Simple. This account is cancelled. These are temporary accounts, allotment account, application account, and then you will see the same thing will happen with first call and final call. See here. Let's just see about the first call. We are done with allotment also. You understood, no? Allotment also really easy. Yes. Then first call. First call also will call the shareholder. See, shareholder, 1 rupee is due on first call. Please pay us, right? So first we will make it due. Due means this entry only. What we have to do in due entry, increase the capital. Yeah, see, first call money due. So to equity share capital account. How you will take the amount? Really easy. How many shares did we allot? 1 lakh shares. Into what? Into face value. Yeah, only face value will go in equity share capital account. Face value doesn't mean 10 rupee. It means first call part of face value. See, first call part of face value, that is 1 rupee. So 1 lakh into 1, that is 1 lakh. So you will increase the capital by 1 lakh. Why you have increased this? Because of first call, right? So that's how you will take it. Then what will happen? Then you will actually receive the money from the shareholders. So when you receive the money, what you have to do? You have to pass the second entry, that is bank account debit to share first call. Yeah, what is the logic of this entry? Really simple. You have received the money, bank account debit. Yeah, and then why you have received this money? Because of first call, to share first call. Yeah, so you see the same thing we have done now. Yeah, here also share allotment to equity share capital we did. See, share first call to equity share capital. Then what happens when money comes? Bank account to share allotment. Here also same, bank account to share first call. Yeah, you can understand the structure now, right? Easy. This shortcut also you will understand. It is really simple. Okay, see here, shortcut first allotted into IP. Yeah, and here allotted into face value. In equity share capital, face value will go, but in share first call, IP will go, IP part. Why is that? Why is that different? Because in share first call installment, there can be premium. No, premium can be hidden in any installment, isn't it? I told you, no, premium can be hidden in any installment. So that is why when we take share allotment, share first call account, we always see the IP part. Okay, you will get to know more about it when we go to the premium. Okay, because in premium, see, there is a difference, no? So that is why it is like that, the shortcut. Okay, fine. So after the first call, then we have final call. Final call will call the shareholder give us 2 rupees. Yeah, final call is due. So pass the entry for that. Make the final call due. How? Increase the capital. Yeah, like this entry, isn't it? Share final call account debit to equity share capital account. Take the amount in equity share capital account. Really easy. Yeah, 1 lakh shares we have allotted into face value. Yeah, final call part of face value, see, 2 rupees. So 1 lakh into 2 means 2 lakh. Yeah, so we have to increase the capital by 2 lakh. Really easy. Why? Because of share final call is due. Understood? Easy. Then what will happen? Then we'll actually receive the final call. So bank account to final call. Yes. So you have understood how it works, isn't it? This is repetitive, no? They are getting repeated, isn't it? Yes, bank account debit to share final call account, isn't it? We have received the money, we have debited that. And then why we have received it? Because of final call. Is that clear? So these were the journal entries if the shares are issued at par. Okay, now let's just see the journal entries if the shares are issued at premium. Then you will have more clarity. Okay, let's go there. Now see here we have the journal entries if shares are issued at premium. Really simple. The second case, the face value is rupees 10 but the issue price is 18. Here also the same thing happened. We issued the prospectus and then we got the applications from people along with the application money. Yes, but let's just say, for example, extra adjustment I am putting over here. Let's just say we have got applications for 1,20,000 shares. But we issued only 1 lakh shares, no? So we can allot only 1 lakh. But the applications we have got is more, 1,20,000 shares, a case of oversubscription. So then how it will happen? It's really interesting to understand. Okay. So see here, the same entry you will pass, bank account to share application. We have got money because of share applications. Yes, we are recording that. But what amount? How many shares have been applied? 1,20,000 shares. So 1,20,000 into 6, that is equal to how much? 1,20,000 into 6, that is equal to 7,20,000. Yes. Now, can we allot all 1,20,000 shares? No. How much can we allot? Only 1 lakh shares we can allot, no, because that's the maximum we have issued. Only that much we can allot. So next entry will be not of 7,20,000. See here, what will happen is, understand, here share application credited, no, 7,20,000. Yes, so that you will cancel. Share application as usual, you will debit and cancel 7,20,000, right? But in equity share capital account, yeah, only 6 lakh will go. 1 lakh into 6 rupees. 1 lakh shares into 6 rupees, because that is the maximum we can allot, allotted into face value. Yeah, allotted into face value. Allotted is 1 lakh shares into face value rupees 6. That's what you can take in equity share capital account. Yeah, so capital is increasing over here. Fine, by 6 lakhs. What about the remaining 1 lakh 20? Yeah, 7 lakh 20 was there, no? 7 lakh 20 you have debited. What about the remaining 1 lakh 20? Remaining 1 lakh 20 will be refunded. In oversubscription, what happens? There are two options in oversubscription. The first option is to refund, no? So this is what will happen. It will be refunded. That 20,000 shares which extra that were applied, on that we have received application money. That application money will be refunded. For that also you have to, make an entry like this. See, to bank account. Our bank balance is decreasing. Yeah, it has been refunded. Is that clear? Logical, no? Easy. 20,000 shares into 6 rupees. Yeah, that is equal to 1,20,000. So that will be refunded. Fine. So you understood what is the difference. Yeah, here extra adjustment I have put, that is why there is a difference over here. Otherwise it will be same only. Okay, like par only. Okay, fine, understood. Then what will happen? After the application stage comes the allotment stage. In allotment stage, what happens? See, the question has told us that we are going to get 9 rupees on allotment. In that, face value is 1 rupee and remaining is securities premium. Yeah, the extra money. But now how the entry will be passed? What we have to do? We have to make the allotment due. How do we make the allotment due? Really easy. See, the entry is share allotment account debit to equity share capital to securities premium. Okay, this is the entry. What is the logic of this entry? Let's understand. Share allotment account you will debit. Allotted, how many shares have been allotted? 1 lakh. 1 lakh into IP. IP means what? Allotment part of IP, 9 rupee. 1 lakh into 9 you will do. Okay, so 9 lakh you will debit. Share allotment account 9 lakh. Okay, 9 lakh money has to come on allotment. That is what we are accepting in our accounting books. Now why we have to receive 9 lakh? Because of share capital 1 lakh and remaining because of premium. How? See, how share capital 1 lakh? See, allotted shares are 1 lakh into face value. How much is the face value in allotment? In allotment, the face value is rupee 1, no? See, rupee 1. In this 9 rupees, 1 is the what? 1 is the face value. Only face value will go in equity share capital account, isn't it? The basic funda. Yes, only face value will go in equity share capital account. Anything extra, that has to go to securities premium. Yes, so that is what we are doing over here. The logic is really simple. We are increasing the capital. That is why this is getting credited by 1 lakh. And then securities premium account is getting credited. Why securities premium account is getting credited? Because securities premium account is a reserve. Reserve have which balance? Credit balance, isn't it? They fall into equity category. They have credit balance. Whenever they increase, you have to credit. Here securities premium reserve is increasing. Yes. So always remember what you will do is, you will take this as a balancing figure. Okay, like you understood that share allotment is 9 lakh. Yeah, allotted into IP. Out of that 9 lakh, you understood 1 lakh has to go to equity share capital account. The remaining 8 lakh will go in securities premium. Is that clear? Okay. Always take it as a balancing figure so that you will not make any mistakes. Right. So we have made the allotment money due. Then what will happen? Then the money will come. When money will actually be received by the company, really easy, is the same entry you will pass. Bank account debit. We have got, how much we have got? We have got 9 lakhs. 9 lakh money we have got. No, I told you bank account follows which price? Bank account plays its game on issue price, isn't it? See, cash, I have written cash or bank. Yeah, 9 rupees we have received per share. So see, allotted into IP. Okay, we have got 9 lakh to share allotment. So share allotment account will be cancelled. Here it was debited, then here it is credited, it got cancelled. Is that clear? Simple. Now the same thing will happen with first call, final call. There is no premium. Like in par you saw, no, the same thing, due receive like that. Okay, so see here, first call money due. On first call, how much? 1 rupee, so see here, first call allotted into IP. Yes, 1 lakh into 1, that is 1 lakh to equity share capital. The same way how it was there in par, no, the same way you have to do. First you have to make it due, then you will receive it. First call to share capital, then bank account to share first call. So first call account, here it is debited, here it credited, it got cancelled, right? Then comes the final call. In final call, what happens? You have to see this breakdown. Always make this rough breakdown. It is very easy to solve all the questions. Okay, so final call, 2 rupees are there. So see here, allotted into IP you will do, share final call account. to equity share capital. Yes, you have increased the capital because of share final call. Then you will receive the money. When you receive the money, money is increasing because of final call. Yes, bank account debit to final call. Is that clear? There is no difference between first call, final call and all. Same like par entry only. Yes, it's just that in the allotment here there is a difference. Yeah, this green I have highlighted, no, this is the only difference. This bank account which I have taken, this is an extra adjustment I have put to make you understand, yeah, why I'm taking different over here. See, applied and allotted. Why is that different? That is different because we may get more applications than we allot. It can be different. So that is why. Okay, different shortcuts are there. Is that clear? Yeah, so these were the journal entries for, you know, issue of shares when it happens at a premium. Is that clear? Easy? Simple. Now let's just see the shortcuts. Now see, here we have the shortcuts that we have already seen, but here I have just summarized them all in one place, and I have to tell you the importance of this. See, the journal entries you will understand as you go on solving few problems. Okay, you will easily get it, but then there is a chance of making mistakes in these calculations. So that is why you have to remember these shortcuts properly and follow them, right? See, the first one for share application is what? Applied into IP. Yeah, how many applications you have got into application part of IP. All right. And then for share allotment, share first call account, share final call account, for all these three, what will happen? Allotted into IP. How many shares we have actually allotted into, you know, allotment part of IP, into first call part of IP, into final call part of IP, like that. Yeah, we have seen, no, in the premium, this example we saw, we got what? 1,20,000 applications. So that is why applied into IP became very important over there. Yeah, it was different to allotted into IP, isn't it? In par it was same, but in applied I took that adjustment and I explained you what is the difference. Yes, okay. And then see, for share allotment, allotted into IP. See, for first call, allotted into IP. For final call, allotted into IP. You understand? Yeah? Yes. For equity share capital, it is really simple. Always allotted shares into face value. Okay? See, equity share capital here, what we have taken? Allotted into face value. Yeah, in application part. Here also the same thing. In equity share capital, allotted into face value part of allotment. Right? In first call, share capital, what did we take? See here. Allotted into face value part of what? First call. The same with the final call also. Equity share capital, what we have taken? Allotted into face value part of final call. Right? So like this. And then securities premium, what will come? Allotted shares into securities premium. Allotted shares into securities premium. That was what? Allotted was 1 lakh. 1 lakh shares into 8. 8 lakh went no in securities premium, like that. Okay. But I tell you, always take it as a balancing figure. That way it is simple. Okay. Fine. Then there was bank account, cash or bank account. Now bank account, remember, you have to see, you know, where bank account is connected. Yeah, see, in the first, bank account was connected with share application. So the same formula will be there, right? In share allotment, what happens? See, allotted into IP. So for bank also allotted into IP. Okay. For first call, see, for first call, what was there? Allotted into IP. So when we receive the first call money, allotted into IP. So you have to understand this, that bank account will follow its connected party, but there can be plus minus. Sometimes what happens is, sometimes we will not get all the money from the shareholders. That's called calls in arrears. Some money will not be received. It will be in arrears, outstanding, okay, from their part. And then sometime extra money will be received, which is called as calls in advance. Or sometimes there can be refunds also. Refund we just saw, no? We had refunded. So here what happened? For the bank, what was the shortcut over here for refund? Refunded into IP. Okay. Sometime, you know, bank account goes differently, but understand, mostly bank account will follow its connected party only. Okay. Right. And then what? And then yes, installments chronology also you have to understand. See, first what happens? For application, first we receive the money. We have issued the prospectus. First we receive the money. Then we transfer it to share capital. Then the due happen, the due thing. But for allotment, first call, final call, how is the chronology? First we are making it due. Due means we have to receive money from these people. Yeah, we increase the capital always. See here, share allotment to equity share capital. Yeah, then we receive the money. See here also, first due, first call to share capital, then we receive the money. In final call also, share final call to share capital, then we receive the money. Do you understand this? Yeah, this chronology also you have to fix in your mind. Just for application it is opposite. We receive the money first, then we transfer it to share capital. We receive the money first, then we transfer it to share capital. Okay, understood, easy. So shortcut also you have understood. Okay, now let's just see the balance sheet disclosure. Now here let's understand how share capital will be shown in the balance sheet. It's really simple. In balance sheet, first you have which section? First you have equity and liabilities at the top, right? Then you begin with shareholder funds heading. Yeah, in shareholder funds, the first subheading will be what? Share capital. Okay, the share capital of the company. So it will be there, share capital, and amount will be there. But now how that amount has come, you have to explain that amount in notes to accounts. Okay, so see here in notes to account, share capital should be clarified as, see, first you will show the limit of the maximum capital that you can issue, which is called as authorized capital. You all know this. And how is it divided, in how many number of shares and what is the face value of each share. You have to show that. And then the total amount of authorized capital will be taken in this notes to accounts, right? Then after this, you have to take issued capital, right? How much capital is actually issued by the company, how many number of shares, and what's the face value of each. Clear? Easy. Then subscribed also. Sometimes what happens, sometimes if you do the IPO, all of that has not been subscribed. Yeah, let's just say 95,000 shares are subscribed when you issued 1 lakh shares. So 95,000 shares of 10 each, like that. Okay, sometimes issued and subscribed is same also. Then you have called up and paid up. So all this you have to show. So how much, you know, company has called up and how much has been paid up, that also you have to present over here. You have to show it. Fine. Okay, the same way, number of shares, and then what is the face value of each. And then let's just say, for example, you know, you have issued shares for consideration other than cash. For example, let's just say you have issued shares but you have not got money. You have given the shares to some other company and got some machinery from them. So that's called what? Getting an asset by issuing the shares. So that is issuing shares for consideration other than cash. It can happen. We'll study about this in the coming videos. Okay, so that also you have to separately disclose over here. How many shares you have issued like this, that you have to disclose. Okay, because you have to communicate the true and fair view of your business, of your company, right? So that's why this disclosure is required. And then the same way I told you about bonus issue also, that free shares can be given to existing shareholders. So how many free shares are given, that also you have to disclose over here. Yeah, so and so shares are allotted as fully paid up by way of bonus. Is it clear? Okay, understood. Then after this, what if there are any call scenarios? We'll study what are call scenarios in the coming videos, don't worry, right? Which means, you know, whatever money has not been received by the shareholders, that's called call scenario. So that you have to subtract, and whatever shares that we have forfeited means, this also we'll study in the coming videos. Okay, the shares we have cancelled. Okay, forfeited shares means the shares we have cancelled because you know, the shareholders are not paying us the money. That's why. So that we have to add over here, amount originally paid up. Okay, and yes, then we will get this amount, called up and paid up amount. Is that clear? So this is the presentation that we have to do in the balance sheet. Okay, as you know, solve the questions and everything, you will be very familiar with all this terminology and everything. So in the next video we will start with the problems. So that's all for this video. I hope you have understood. If you have any doubts, anything, comment down below, or you can message me in Instagram. All the notes and everything will be uploaded in our Telegram channel. Okay, you can get the PDF and see the properly. Wherever you have doubts, just take a screenshot and send it to me on Instagram. I will try to answer your doubt as soon as possible. Okay, so that's all for this video. See you in the next video. Bye bye.